What people have a hard time understanding and grasping are supercycles. I think people have dampened their expectations for Bitcoin, partly because Bitcoin's been treading water. And there have been a lot of OGs, original Bitcoiners that are selling above 100,000. But it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask. But to me, what's more obvious is Ethereum can have a huge move into year end. And Wall Street is building, and Larry Fink wants to tokenize everything on Wall Street, on the blockchain. That means Ethereum is where people are starting to raise their growth expectations. And if you're raising your growth expectations, then your discount to the future is going up. So I think that there's a bigger move in Ethereum, and it can be like 9 to 12,000 by January. I think that's about right. I think Ethereum just 3,600 more than doubles between now and year end, or between now and January.
As the government shutdown comes to a close and markets tighten, investors are watching Bitcoin and Ethereum very closely now. As Ethereum climbs back toward $4,000, it's weathered short-term volatility and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. And if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
Even Cathie Wood wrote about it. She thinks stablecoins have been cannibalizing demand for Bitcoin. But stablecoins and tokenized gold run on smart contract blockchains like Ethereum. So the reason we turned structurally bullish in 2009, was because our cycle work showed that there was a long-term bull market starting. And beginning in 2018, we identified two future supercycles. One was millennials, and the fact that they're entering the prime age workforce. That was a powerful tailwind that would last up to 20 years. And the second was there was a global prime age workforce labor shortage. I know it sounds like plain vanilla to say that, but that was going to set the stage for an AI boom. So we're in the midst of an AI boom that is causing prices to levitate. But this is pretty textbook. In 1991 to 99, there was a labor shortage and tech boomed. 1948 to 67, there was a labor shortage and tech boomed. So tech is booming, and a lot of people look at stocks that have a high Sharpe ratio, right? They're just going up, and they assume it's a bubble. And so people have been chronically trying to short NVIDIA every step of the way up. And then the second thing people anchor to is that, well, many people aren't really that old in our business. I was actually an equity research analyst during the dot-com boom. So many people are saying this is just like the dot-com mania. There's some similarities, but we're so far from it. But everyone thinks that this is big again. And the mistake I think people make is they have to understand.
In the late 90s, right? Which was the heart of the
Yes, yeah. And I was actually helping doing the wireless sector. So they were part of that build out of the fiber and the cellular towers and the internet. I remembered that data networking analysts asked me, Tom, what is TCP/IP? Because wireless companies had to do some basic architecture. So This is very different because AI, of course, is gaining function. Internet wasn't gaining function. There was just a lot of spending. Really, right now, is capital spending is behind the curve. People have gotten pretty bearish in the last couple of weeks because the government shutdown kind of has deprived the economy of money. And then the Treasury Department isn't dispersing funds, so their liquidity has shrunk. And it's caused stocks to actually wobble. And every time the S&P is down 2 or 3%, or AI stocks are down 5, I think people get really cautious. I think, first of all, bullish sentiment is not even anchored properly. People become so hesitant. I think everybody thinks there's a top. Here's the thing. When everyone says there's a top, there cannot be a top. The top in the dot-com was because nobody thought stocks could ever fall. They actually thought we were entering like an era of continued prosperity. The second thing to keep in mind is that markets have been strong for the last 6 months. There is incredible demand for equities because people are really off sides. That's what you have to keep in mind. In April of this year, people thought we were facing Armageddon because of tariffs, and you had many economists proclaiming a recession, and that's how institutions traded. They were actually positioned for a massive bear. They can't fix that in 6 months. So we're now getting into year end where institutions, 80%, are trailing their benchmark this year. It's the worst performance for institutional fund managers in 30 years, and they have 10 weeks to fix it. They're going to be buying stocks. And finally, visibility for AI has not even been affected by the government shutdown or anything. So companies are going to start, as they think about 2026, start making announcements. So I think in the final months, I think one surprise is the AI trade's going to come back strong because it's wobbled. But the Fed is getting people scared because is the Fed going to suddenly hammer down on things? But keep in mind, inflation has been softening. So if they cut in December, they're confirming they're on an easing cycle. Now that meeting's not for a few weeks, but that would be really bullish for financials and small caps. And by the way, what's correlated to tech and financials and small caps? It's crypto. So I think you're going to have a massive crypto rally as well.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Well, I think people have dampened their expectations for Bitcoin partly because Bitcoin's been treading water. And there have been a lot of OGs, original Bitcoiners that are selling above 100,000. But it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask. But to me, what's more obvious is Ethereum can have a huge move into year end, because even Cathie Wood wrote about it. She thinks stable coins have been cannibalizing demand for Bitcoin, and gold and tokenized gold is cannibalizing demand for Bitcoin. But stable coins and tokenized gold run on smart contract blockchains like Ethereum, and Wall Street is building, and Larry Fink wants to tokenize everything on the blockchain. That means Ethereum is where people are starting to raise their growth expectations. And if you're raising your growth expectations, then your discount to the future is going up. So I think that there's a bigger move in Ethereum, and Mark Newton, our head of technical strategy, thinks we can be like 9 to 12,000 by January. I think that's about right. I think Ethereum just 3,600 more than doubles between now and year end, or between now and January.
Do you think that that also spills over to cryptocurrencies as far as Ethereum and Bitcoin, that institutional participation?
Yeah, I do, Tom. One thing you're pointing out, and that's correct, is that 2025 is the third year where the S&P will be up double digits, probably up 20% this year. So 3 years of 20% gains in a row. Okay, remember at the end of 2022, people were saying we were Armageddon. Nobody was bullish. So in the last 3 years, wealthy individuals and hedge funds recommended people go to cash, or they do alternatives like private equity, private credit, or venture. But the S&P 500 has trounced all of those categories of assets. So this is a comeuppance because, 3-year return, what is someone's excuse for basically maybe having flat performance or up 15% when the S&P is almost, up 200%? So this is really the reason 2026 is probably not as bearish as people think, because now next year, I think people are going to be like, wow, wait, NVIDIA and all these are public companies and their earnings are growing 50%. I think people are going to actually start chasing them next year. That's really positive for crypto because, as you know, there is also this argument today that the crypto cycle is a 4-year cycle, so it should be ending now. So people are trying to fade that. I think people are trying to fade everything, the S&P and the crypto, but forgetting that the Fed is beginning to cut, and the ISM, and we've written about this, is more correlated to Bitcoin than monetary policy. And until the ISM gets to 60, Bitcoin really can't peak. So I think this is pretty positive for crypto. But crypto, it's kind of been hurt because, monetary liquidity hasn't been really increasing. The Fed has been under QT, quantitative tightening. That's ending in December. And the Fed hasn't really given clear signals that they want to ease. So I think there's been a little bit of confusion for investors. I mean, I would say if I had to say what is the most overrated risk, I think the most overrated risk is that inflation's coming back. But the reason I think it's overrated is I think too many people think monetary easing cycles create inflation, or they think GDP growth creates inflation. But inflation is a very mysterious thing because we had a lot of easy money for years and there was no inflation. And now that the labor market's softening and the tariffs basically were supposed to create another wave of inflation, it hasn't, and housing is now tanking. How do we get inflation if the big drivers are housing? The big drivers of inflation are housing, labor costs, and then goods, but none of those are inflating. I heard a Fed speaker last week say core services is inflating again. We checked it. That's dead wrong. PCE core services is now running at 3.2%. It's been long-term 3.6. It's actually running below average. And core services generally runs above 2% because goods offsets that. So I think that there's a false belief inflation is actually strengthening.
As the recent crash in crypto has investors worried, with Bitcoin falling to $102,000 as Ethereum remains below $4,000, the crypto market remains in limbo. As crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up, and Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug-of-war we see when an asset approaches such a huge barrier. The bigger picture looks very different though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history.